Welcome to Put Paradise. Just want to remind you to head over to my website, putparadise.com, where we're offering beginner training content focused on put credit spreads and the put path methodology. We're able to potentially get 50% annual rate of return while trading for only 15 minutes per week. You can download my Put Path Options Trading System Guide, which outlines our trading methodology. So let's dive into what do we do on a Monday morning to analyze our positions and to see if we're going to trade anything this morning. Typically, we trade on Fridays. We trade 28 days to expiration, but often during the week, Monday through Thursday, we're also going to trade because we're going to be looking for favorable setups. So what do I mean by a favorable setup? We typically look for volatility in the market that's increasing. So if you see vol go up or any of the individual underlyings that we have that have a decrease in that specific commodity or alternative asset. So open up your Robinhood app. You scroll down to the stocks and the ETFs to get a sense for what's happening in the market. So today's Monday. It's about 10 minutes after the open. What we're looking for is anything that's unusual. So you can see you've got QQQ down, you've got gold way down, you've got IWM down, IBITS up, so on and so forth. Overall, the VIX is up slightly, not really enough for us to take advantage of any major stock underlyings. So we don't see anything that's minus 1%. And that's really the cutoff line when we're trading during the week. The only thing that's offering us a good enough down move is gold. So today I would look at all these positions and I wouldn't trade anything, at least right now. Probably check in on the market 2 or 3 times a day just to see how it's going. I also have automated reminders set up in Robinhood so that if something goes down 5%, it'll send a notification to make sure that I can look into a specific underlying. But again, nothing is really tradable today except for gold. So let's go ahead and execute a gold trade. All right, so you just click on trade, trade options. And we're going to go out to January 30th, which is 32 days to go. We're going to go to selling the put. You scroll down to our chance of profit, which is going to be 85. Okay, so we're going to sell the 375. So you hit the plus. You go to buy the put. So we're going to go down 5 wide for protection. So you go down to the 370. You hit the plus. Okay, so you notice something here. You're going to get 65-cent credit. So that's excellent pricing on this $5 wide spread. So you may be asking yourself, why are we getting such good pricing? Typically, you want to get around 50 cents on gold. We're getting great pricing because of the sharp 3% down move today. So you hit continue. You put in your lot size. Could be 1, could be 10, could be, whatever you're comfortable in your account. You can let it default to what Robinhood is suggesting. As you can see here, we've moved from 61 down to 58 rather quickly. So maybe something's happening in the market. Now it's back to 59. So you can try maybe 60. You see your estimated credit is going to be, in this case, 600 minus the regulatory fees of 40 cents. Max profit, 600. Your break even is going to be 374.40. So that's 60-cent credit minus the strike price, which was 375. So you figure your max loss is going to be your profit minus the total width of the spread. So since it's $5 wide, that's a $500 spread times 10 is 5,000. And then we have a max profit of 600. So the max loss theoretically is 4,400. Click review. Make sure everything looks good. Swipe up to submit. And you are good to go.